Have you ever wondered why the dollar, currency that has ruled the global economy for decades, is suddenly showing cracks in its dominance? Today, we are diving deep into a story that affects every single one of us, from the prices we pay at the grocery store to the future of global trade. The dollar has been the backbone of international finance, the reserve currency of choice, and the symbol of economic stability. But recent events are challenging that supremacy, and the implications could be enormous. If you want to understand this impacts your money, your investments, and the global economy, stay with me till the end. And before we dive in, make sure you hit that subscribe button and click the bell icon, because we break down complex economic topics into simple stories that actually make sense. For over 70 years, the US dollar has enjoyed an almost unchallenged position in global finance. After World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, pegged to gold, and other currencies followed suit. These documents mean that countries held dollars as a safeguard of international trade, and the dollar became the standard for pricing commodities like oil, gold, and even food trade. For decades, this gave the United States an unparalleled advantage. They could borrow at lower cost, export their influence globally, and print money with relatively limited consequences. But now, cracks are beginning to appear in this system. One of the primary reasons behind the weakening dollar is the unprecedented level of debt in the United States. The US government has been borrowing at historic rates, printing money to finance stimulus packages, infrastructure, and social programs. While this initially seemed manageable, it has started to erode confidence in the long-term value of the currency. Investors and central banks around the world are increasingly exploring alternatives to diversify their reserves. Another critical factor is the rise of other global powers. Countries like China, Russia, and even the European Union are actively pushing for alternatives to the dollar in international trade. The rise of digital currencies, including central bank digital currencies, is also changing the landscape. Bitcoin, stablecoins, and even China's digital yuan are starting to offer a vision of a financial world that doesn't revolve entirely around the US dollar. So, what happens when the dollar loses its power? The implications are massive. For the United States, a weaker dollar means imported goods become more expensive, inflation could surge, and the government might struggle to fund its debt at sustainable interest rates. For other countries, the move away from the dollar could reshape the global trade. Oil and commodity markets could start pricing in other currencies, and international contacts may no longer rely solely on dollar. Emerging markets might find more flexibility in conducting trade without the pressure of dollar-denominated debt, reducing their vulnerability to US monetary policy. Essentially, a shift away from the dollar could lead to a multipolar currency world, which hasn't been seen since the mid-20th century. The weakening dollar is not just an economic issue, it is deeply geopolitical. The US has long used the dollar as a tool of influence. Sanctions, trade agreements, and global financial controls have relied heavily on the dollar supremacy. If global players reducing their reliance on the dollar, America could lose a significant portion of its global leverage. Countries like China and Russia are strategically encouraging alternatives to the dollar, often by conducting bilateral trade in local currencies or using gold-backed agreements. Even alliances in Asia, Africa, and Latin America are considering reducing their dependence on the dollar, signaling a potential seismic shift in international relations. Now, let's talk about how this affects you directly. A weakening dollar often leads to higher inflation, meaning your everyday expenses, groceries to fuel, would rise. For investors, this shift could affect the stock market, bond yields, and international portfolios. Those holding dollar-denominated assets might see a decline in value, while alternative currencies or commodities like gold might gain appeal. Businesses that rely on imports from other countries could face higher costs, while exporters might gain a temporary advantage if dollar falls. Essentially, whether you are an individual, a small business owner, or a global investor, the dollar declining power touches every corner of economic life. So, what does the future hold? While the dollar is certainly under pressure, it is far from disappearing overnight. The United States remains a massive economic powerhouse with significant technological, military, and financial influence. However, the trend is clear. The world is exploring alternatives, diversifying reserves, and preparing for a more multipolar currency system. Governments, investors, and businesses that understand this shift early could adapt and even thrive, while those ignoring it may face significant challenges. Digital currencies, new trade agreements, and innovative financial instruments will play a central role in shaping this next chapter of global economics. So, understanding the dollar's declining power is more than just a news story. It's a glimpse into the future of global finance. That's it. If you found this video insightful, make sure to hit the like button, share it with with friends and family and subscribe to the channel for more deep dives into economic shifts that impact your life directly. Comment below with your thoughts. Do you think the dollar will maintain its dominance or are we heading toward a new financial world order? Your opinions could spark a conversation that helps us all navigate these uncertain times.